Well, it's another week. Another cryptocurrency exchange is getting sued. Surprise. First, we had Kraken getting thrown in the fire, then Coinbase getting attacked. Now it's frickin' Binance. And the funny part is, Binance doesn't even operate in the USA. And it's not the SEC that's doing the suing this time either. It's the US's CFTC, which is the Commodity Futures Trading Commission. They have filed a lawsuit against Binance and the CEO CZ. According to the CFTC allegations, Binance has knowingly offered unregistered crypto derivatives products to US customers. Binance is also being accused of directing customers and employees to actually use VPNs to conceal their location in order to be able to access their derivatives trading exchange. The CFTC even alleged to have proof of this from gaining access to internal chats between employees, including the chief compliance officer. How they got that information, who the heck knows? Anyway, he told employees, apparently, allegedly, to ask US customers to hide their locations. Binance has even allegedly gone as far as instructing VIP customers to set up shell companies in territories like the British Virgin Islands in order to avoid any kind of trading restrictions. It is also alleged that Binance has a secret in-house trading desk of up to 300 different accounts to trade against all of its customers, and that they were using private customer transaction logs in order to see what users were investing in, and of course where users would be stopped out. Now, since the news came out, $169 million has been withdrawn from the exchange, which isn't actually that huge of an amount, to be fair. But it is also worth noting that this is just the CFTC's version of events. Binance obviously has already come out and refuted these claims, like it's gonna have to play out in court now. Also, it is worth noting that since 2020, Binance has been very strictly keeping out US customers. So a lot of this stuff, a lot of these allegations are coming back from 2018, 2019. And while social media is buzzing with all kinds of hot takes about how the sky is once again falling, what is most likely here to happen, in my hot take, is, as we so often see being the case here, they're gonna get fined, they're gonna get a slap on the wrist, and then it's probably just gonna be business as usual. One very interesting point here from the suit too is that the CFTC has listed Ethereum, Bitcoin, and Litecoin as commodities. Although, you have to remember that the SEC just went after Kraken for offering Ethereum staking, because apparently staking your Ethereum coins constitutes a security. Come on, man. Regulators can't decide what is what or who is who and who's in charge of regulating what. It's insanity in the US right now. The US crypto industry, it's in a dark place because regulators are keeping it in a dark place on purpose. Remember in the recent Coinbase suit by the SEC, basically Coinbase has literally said to the SEC, tell us the rules and we will follow them. To which the SEC said, you know what? We'll see you in court. We're not going to tell you a damn thing. That's insanity from the regulators. The USA is on an absolute crypto warpath here right now, and it's not awesome. Meanwhile, surprisingly, over in China, Beijing, via the back door of Hong Kong, is starting to warm up to crypto once again. What's going on here, man? Apparently, Chinese banks are starting to look to court crypto firms once again. And when I say Chinese banks, I mean Chinese state-owned banks. Kind of a big deal. Apparently, these banks have actually been reaching out to cryptocurrency companies in Hong Kong or abroad, trying to get them to come and register their businesses. And it's wild to see the US bringing the hammer down on crypto, the money of freedom, right? From the country of freedom. Well, China is warming up against, once again, to the industry. It's pretty nuts. Now, in other banking news, First Republic Bank is apparently getting a backdoor bailout, and the Federal Reserve is actually increasing the emergency lending program. But while First Republic Bank has about $200 billion in assets, it's just a little baby, compared to Deutsche Bank with 1.5 trillion in assets. The sick man of the banking world. This is a too big to fail bank, though. It is classed as a systemically important bank. But could it be the next domino to fall in this banking crisis? Well, if the Jim Cramer curse continues, then it may very well be. He said that DB is both very fine and very wealthy. Uh-oh, DB, watch out, man. Anyway, all of that being said, it's really anyone's guess as to just how bad the banking crisis is going to get before it starts getting better. How many more banks are going to have crises and go under, right? It's unclear, of course, if the banking crisis as well is going to turn into a full-blown economic crisis. And will that lead to a massive recession in the USA? So many variables remain that could derail markets in 2023. And of course, 2023 is likely going to be a year full of anxiety for investors. So, stay strong, guys. But while the traditional finance world is on fire, kind of feeling pretty good, chilling with my stack of Bitcoin, but in my hardware wallet. Now, before we dive into the Bitcoin charts, if you are a trader, then you need to get yourself an account over on BYBIT. They have the best futures markets in the cryptocurrency market, vibrant markets for their altcoins, wildly popular copy trading service, up to $30,000 in deposit bonuses, as well as a chance to win up to $1,500. In order to win that, all you need to do is make a deposit of $100 or more, make a trade, and you'll be eligible to win that $1,500 prize. You can sign up using the link down below in the description. Now let's take a look at the weekly charts for BTC. Well, it seems that 28K was indeed a very tricky price point for BTC, as we were discussing last week. We failed to push Bitcoin over that point of resistance, and we're currently seeing a correction forming up. Remember, $28,000, this is a really important area for Bitcoin, not just because it's a previous area of price resistance, but because about 600,000 BTC changed hands at that price point, or very close to that price point. So there's going to be a lot of sellers there who might want to get out at break even, thus providing a lot of sellers every time we get up there to touch 28K. Whether or not next time we'll be able to push past, we shall find out. A possible pullback area to watch will be around 25K to 25.5K, which is where we see two key areas of previous resistance that could now be flipped into price support. It also lines up with the 200-week simple moving average, a very, very important moving average, in my opinion, to keep an eye on here, adding a bit more weight to that price zone in terms of its overall importance. Also worth noting that previous breaks of the 50-week moving average all resulted in major price moves to the upside. Obviously, that may not happen this time. Significant risks, as we have been discussing at length in the last few weeks, months, do remain in global markets, to which Bitcoin and the cryptocurrency markets more broadly may simply not be immune. So it's going to be fascinating to watch Bitcoin reacting and continuing to react to the meltdown that we're seeing right now in the global banking system, as well as the changing world order and the challenge of the Chinese yuan as a major emerging competitor in international trade to the US dollar. But that's like a topic for another day, but it's happening nevertheless. Okay, that's it. Subscribe now. I'll see you next time.